All right, let's talk about the housing market. I mean, if you've even glanced at it lately, you know prices can feel, well, just impossible. So, whenever a new idea pops up that promises to make owning a home a little easier, it definitely gets our attention. Today, we're digging into one of those big ideas, the 50-year mortgage. The promise? A lower monthly payment. But the question is it a brilliant solution or is it a really dangerous financial trap? Let's figure it out.
For so many people, that dream of owning a home is starting to feel like it's just slipping out of reach. You've got high prices, you've got challenging interest rates, every single dollar counts. So it's totally understandable that when a product comes along that says, hey, we can lower your monthly bill, you're going to be curious. It sounds like a lifeline, right? But is it actually the answer we're looking for?
And here it is. This is the hook. You look at the numbers side by side, and on a $400,000 loan, the 50-year mortgage is over $300 cheaper every single month. I mean, that's not chump change. That's money for groceries, for your car, for savings. On the surface, it looks like a no-brainer.
And that right there is what we're calling the 50-year temptation. That lower payment is incredibly appealing. But, as with most things in finance that seem a little too good to be true, there's usually a catch. So let's dig a little deeper and see what's really going on behind that smaller number.
And this is where the whole story just flips on its head. Financial experts are not holding back on this one. One source called the 50-year mortgage one of the worst financial products ever conceived of for consumers. I mean, that is an incredibly strong statement. It suggests that instead of helping you out, this loan might be designed to do the exact opposite.
Okay, so let's pull back the curtain and take a hard look at the hidden price tag. This is where we get into the nitty-gritty numbers and uncover the true cost of that lower monthly payment, not just for 1 month, but over the long haul.
All right, let's break this down, because that total interest paid column, that's where the secret is. Yeah, your monthly payment is lower with the 50-year loan. We see that. But look at what it costs you. You end up forking over more than $750,000 in interest alone. That's nearly double what you'd pay on a standard 30-year loan. Your $400,000 house actually ends up costing you over $1.1 million. It's wild.
Let's just put a spotlight on that number for a second. Over $357,000. That's the extra cash you are just handing over to the bank. For what? For the privilege of stretching out your payments for another 20 years? That's enough money to buy a second house in a lot of places.
And this chart just says it all, doesn't it? I mean, that's not a small difference. It's a canyon. The bar for the 50-year loan just dwarfs the 30-year one. You can see clear as day how much more of your hard-earned wealth is being transferred straight to the bank. It's just a staggering amount of money.
But the cost isn't just about the extra interest you're paying. It's also about what you're not building. This brings us to what's called the equity trap. See, equity is the part of your home you actually own. And for most people, it's the number one way they build wealth. With a 50-year mortgage, that whole process slows way, way down.
Okay, first, a real quick rundown on something called PMI, or private mortgage insurance. Basically, it's an extra fee you have to pay every month that protects the lender, not you. So for any homeowner, the big goal is to get to 20% equity as fast as you can so you can stop making that extra payment. Now, look at this. With a normal 30-year mortgage, you're probably done with PMI in about 11 years. But with a 50-year mortgage, you're stuck paying that extra fee for 22 years. That's double the time, an entire extra decade of paying hundreds of extra dollars every month for something that gives you zero benefit.
And this slow-motion equity growth has real-world consequences. The source material used this really powerful phrase. It says, these products snatch away opportunities. And that's exactly what they do. They snatch away your ability to borrow against your home for huge life events, like sending a kid to college, or funding your retirement, or passing something on to the next generation.
The financial numbers are pretty stark, but the human cost, well, that might be even bigger. Let's translate this 50-year term into what it actually means for a person's life. Think about this for a second. The median age for first-time homebuyer right now is 40. Now do the math. If they take out a 50-year mortgage, they will still be making house payments when they are 90 years old. 90! That's at a time in your life when your income is probably going down and your healthcare costs are going up. It's a recipe for financial stress right when you should be enjoying your retirement. And really, this quote from the source just cuts right to the chase. It's blunt, but it's crystal clear. There is one obvious winner in this whole scenario, and guess what? It's not the homeowner. The entire structure of this loan is set up to overwhelmingly benefit the lender.
Okay, so if the 50-year mortgage is looking more and more like a trap, what's the smarter path? Well, it's the product that's been the bedrock of American homeownership for generations. Let's talk about why the good old 30-year mortgage is still the gold standard.
The benefits here are basically the exact opposite of all the problems we just went over. You'll own your home free and clear 20 years sooner. You'll build wealth and get rid of that pesky PMI twice as fast. And you will save a literal fortune in interest. You'll actually be able to enter retirement debt-free and have the flexibility to move for a job or to be closer to your grandkids. And this really gets to the bottom line, doesn't it? Homeownership isn't just about having a roof over your head. It's supposed to be one of the main ways you build financial security for yourself and for your family. A mortgage should be a tool to help you do that, not something that makes it a 50-year-long struggle.
So we end up right back where we started, but now with a totally new perspective. That tempting lower monthly payment, it comes with a massive cost. A cost you can measure in hundreds of thousands of dollars, in decades of your life, and in opportunities to build wealth that you'll never get back. It's just a powerful reminder to always look past the sticker price and ask, what's the real cost here?